good morning. How is everyone doing? Welcome back and tuning into my channel. This is Neo, and everybody have a sip of nice cup of coffee and good afternoon. This is Saturday. Actually, this is Friday afternoon, and let's take a look at the stock market. OMG, don't they look bad? Do you remember when we last saw this type of drops? It was roughly 1 year ago, if you remember. And if we take a look at the VIX, which is the fear index that gauge the investor sentiment, since the beginning or the end of last year or beginning of this year, under 14 now has creep up to over 30, actually 31 and 05. Remember what I said? Every time the fear index approaches close to 30 or even surpass 30 and to the north of 30, it is a signal that investors are becoming very fearful, which has always been the right time to buy. And last year it surpassed 50. That was exactly 1 year ago, April 9. The timing is so interesting. We are almost closing up to April 9. And since the end of last year, if you look at my video close to the end of last year, I did mention it was very interesting that the VIX, the fear index, that gauge investor sentiments, was kind of low, under 15. And I was suggesting investors should try not to use margin, because every time it goes so low, something bad will start to happen. And well, I cannot call it more correctly, looks like. And this time, is it the bottom for stock? Who knows? If you have the crystal ball, let me know. People who tell you exactly where the bottom is, they want to sound like they are genius. But when we look at what happened in the recent past, every time it surpasses 30, it is always a good time to buy. This is 2022 when the some of the commercial bank collapsed, and it created some type of fear, and SoFi was at the bottom at this time. It was around 6.55 that I start to buy. I think SoFi actually was lower. It was under $5 per share for SoFi at that time, and I start to buy here actually 2023 2024, 6.55. And the worst that this index can date back to was the worst day was this. If you remember, the financial collapse of many banks, which is actually our topic for today. We will be discussing two of the most outstanding financial institutions in the United States. At least that's what I think, the two best financial institutions in the United States. So if you look at the October of 2008, right? Wow, it was what? 89.53, the high. Wow, OMG. Yeah, that day I remember the market just looked like this. Just exactly looked like this. S&P 500, drop could be even 2% on one day. Dow Jones, NASDAQ, over 2% on one day, right? So, yeah. So if you are fearful, you are a current market news-driven person. Me, I have been with the market for 27 years, and I have seen the worst, up to 911. Everything looked like this also, 911. Financial tumor of the 2008 we just saw. And then 2012, when the Brexit, Britain and other European country may default, and which never happened. Yeah, just when you expect something to happen, it doesn't happen. Just when you don't expect something to happen, it happens. Remember what I said? This market will go down until most mean maybe 75% plus of the investor become bearish. Then the market will turn the other way. Right now we are very close. Judging at by looking at the VIX, I think for now we have at least 65% of investors are very bearish. So we are getting there. If we just either have one more week staying at around 30, or 1 or 2 days that spike to close to 35 or even 40, then I would suggest we are very close to the bottom. But nobody knows exactly when the bottom will happen. But are we now in a bottoming process? I believe so, because last week actually we saw the major indexes actually surge up nicely for a couple of days, meaning investors all around the world, not just in the United States, are actually eyeing at the low price to earning ratios of companies, of publicly traded companies in the United States, and they know that United States companies are one of the best, some of the best to invest in because of their global reach and their efficiency that they bring to their own industries. And I believe all eyes are eyeing on when, is the right time to get in. And some investors like me are already trying to buy some of the best performing stocks, regardless of how long this war, if you will, may continue, maybe just 1 week or maybe a few more weeks. Nobody knows. But we, as long-term investors, we focus on company fundamentals. And today we're gonna focus on two best financial companies in the United States and look at their fundamentals, especially their membership growth and revenue growth. First, wow, JP Morgan. Now, when we look at JP Morgan, we want to look at the growth for the last 10 years, especially. Why? Because that is when the time the JP Morgan stocks start to emerge from their ceiling here, right? You see the ceiling, 56, 57, 58. And if we draw the line here, let me draw here. It's kind of blocking our view. Then we can see that by 2016, it went past the ceiling and continued the surge to almost 310. I think 310 was it? 337. See, 337, the high, the 52 weeks high for the last 52 weeks. And then so what is the overall increase for the last 10 years from 2016, right? So it would be around 58 to 338 here. So that is about 500% increase. And what has driven this increase of share prices for JP Morgan is the top line and bottom line growth, which was around 20 something percent. And then the annual membership growth was about 8 to 10%. You compare that to SoFi's 35 to 38% year-over-year membership growth. JP Morgan, as a much larger financial institution, is growing at a much slower pace. But on a membership count, it's about the same as SoFi. However, for this last 10 years between 2016 and 2026, JP Morgan's stocks annualized return is roughly 19.9% year-over-year increase, with their membership growth at between 8 and 10% annualized year-over-year growth. But SoFi is 3.5 times growth for membership year-over-year growth, 3.5 times faster than JP Morgan. JP Morgan grew membership between 2019 and 2024 35%. So the number of digital active customers have experienced high growth, with 71 million active digital users in 2024 for JP Morgan. See, JP Morgan, Chase. Yeah, they group together. JP Morgan and Chase Bank, they group together. And 35% since 2019. But SoFi, the membership growth, right? The digitally active customers, because members, the members for SoFi is only digitally active too, because SoFi is what? SoFi is a company that doesn't have brick and mortar locations. So all their members are digitally active. So if we look at JP Morgan and Chase Co., the digitally active customers has grown only 35% in 5 years between 2019 and 2024. SoFi achieved that in 1 year, 35 to 38% year-over-year membership growth for SoFi. So if SoFi can grow so fast in 1 year, can grow the equivalent of 5 years growth for JP Morgan, do you expect SoFi to go up 500%, meaning 5x, for the next 10 years? No, of course, SoFi stock's share price will grow up much faster. Because of why? Because they have faster top and bottom line growth as well as membership growth. I have seen company with similar growth rate of SoFi for the next 5 years, for the 5 years that they see over 30% year-over-year revenue and membership growth. I have seen those companies' share price 10x to 20x for the next 5 years. So meaning, in that context, SoFi, we should expect SoFi to see their share prices gain 10x to 20x for the next 5 years. Just look at JP Morgan, right? This is probably for now the best, not the best, but the most popular United States financial institutions, and is growing revenue nicely because they are also trying to modernize their legacy system, and they are trying to go digital as well. So if digital is not the future, why would the legacy company, financial companies such as JP Morgan, Chase, and Co. go digital if it is not the future, right? The same thing, if electric car is not the future, why would GM, Ford spend billions in CapEx to fund their R&D and expansion in electric car channels, right? So it's the same thing. So until next time, everybody, please be safe. And I am starting to buy already. And as my last video shown that, I already let everybody know I have bought new, fresh 1,000 shares of SoFi, roughly at $16 per share. This past Friday, I bought another $300, another 300 share for SoFi at under 15.50 per share, under 15.50 per share. If it continue to dip, I will exercise my other allocation to buy 700 more share for SoFi Technologies. Hopefully, if it can dip under 15 even, I become very, very happy. Because I know this company is gonna to be what? Just like what we just discussed, 10x to 20x if we base on the history of all other publicly traded company which see 30% plus annual growth in membership, revenue, top and bottom line growth. So I believe SoFi, if it continue this growth trend, it should achieve similar results. But nothing that I'm saying today is financial advice. Please do your own due diligence, everybody, and have a nice sip of coffee. Have a wonderful time. Chichi, cha-cha. Very, very good coffee. OMG, very good.